Esty, what do you think about the optimism today on trade? I mean, I guess it just depends on the tweet or the mood of the president to drive markets to some extent.
Absolutely. We've continued to see markets seesaw with the trade news. Any talks, any easing, any truce is going to be an encouraging sign for markets. I wouldn't read too much into it. We've been saying for quite some time, and we still have the same view, we don't expect a swift resolution, and we don't really see an incentive for President Trump to come to a deal right away so far in advance from the U.S. election. Being tough on China has worked quite well, and I think he'll continue to keep that stance. At the same time, we've started to see a couple of data points that worry a little bit on the U.S. economy. And so President Trump's going to have to navigate between being tough on China and trying to avert a sharp downturn or a recession in the U.S. into next year. So I think we'll see exactly the type of news we've seen recently. Escalation, some kind of status quo or truce, and then more talks, probably better news at some point in October, and then maybe another escalation before we see any kind of agreement.
So a real roller coaster is what you're saying.
Esty.
What? Sorry, go on, Anna.
Yeah, a roller coaster indeed. You don't think then that the political calendar in the US is going to push President Trump into doing some sort of deal here?
Probably not before next year, unless you really start to see sustained weakness in the U.S. economy. We had a disappointing manufacturing number for August, whether it's just below 50, so pointing to contraction, whether that gets confirmed with a September number. It's not a surprise. I think they're waiting till October for the next round of talks. The more we see that type of data, the more pressure there will be to have some better news. But I think we're more likely to see a truce or maybe a delay of further tariffs as talks keep going, and not any kind of grand deal, definitely not before the end of the year, maybe at some point early or so 2020, so he can ride that into the election.
When you look at equities, Esty, buying the dips had been a strategy that played so well for the last, for this entire year, basically. Is that still the case, do you think, or do you have maybe a sell the spikes strategy that's ready to go into place?
No, I'd say we're still relatively constructive on risk assets and on equity markets. We don't see a U.S. recession or a global recession in the short term or really into 2020. Of course, given the uncertainty, especially around trade, that it's a lot tougher to have the conviction level much further out into 2020. But for now, we don't see a recession. You're going to have a lot of central bank support. So I think equity markets are going to grind higher. It might not be stellar, but I think you will see the upside. And what we've also seen is the sell-offs have actually somehow become shorter. So compared to Q4 last year, and then you had May and August, every time we've had a little bit less of a dip. You have a lot of investors still on the sidelines. Flows haven't been that supportive. Maybe a bit better for the U.S. than elsewhere, especially better than in Europe. But for now, I'd say buy the dip still probably works, and we keep that relatively constructive view for the next few months.